what happens when this thing gets to where it's too big or I need somebody else to run it? Or what happens when this thing takes off? Like, am I ready for success? Those are the what happens when should be the question that an entrepreneur is asking. What happens when this thing takes off? Am I going to be ready to have an idea of who I need to hire for what roles in what order?
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. All right, dude. Eric, thank you so much for being here. Definitely appreciate it. I love connecting with other people in the group, and it's so good to get a chance to know you a little bit better here. Happy to be that you're here on the podcast and get to share a little bit about your story with all of my fellow tech professional listeners who are interested in real estate. So kick us off, man. I got a question here to kick us off here is, you got into real estate in a sort of accidental way, right? Burying a property. Tell me a little bit about that background.
Okay, yeah. So, Steven, thanks for having me on, man. Super excited, and I love talking with people that speak the same language. So, looking forward to it. It'll be fun. But yeah, so the way I accidentally burned a property. So at the time, I was still working for Cincinnati Fire Department, and I retired as a fire lieutenant after 17 years. So during this time, just being entrepreneurial, and even at that time, I didn't realize I was. But I had always done like the side hustle, this side hustle, that side hustle, and it never seemed to work out. And so I thought, well, real estate's a good thing. I had done some remodeling work and things like that. So I had to go buy my first single family rental. The numbers made sense. As far as I knew. And so I had to sit in front of my grandfather, who's like the patriarch of this family of entrepreneurs, right? And I'm explaining to him what I'm going to do. And he said, okay, well, it seems like you're pretty confident in this. Oh yeah, this is going to be the greatest thing on the planet. I said, all right, go for it. And so I got his blessing. I moved forward. I get the keys to this single family rental. I don't know how to be a landlord. I didn't get that far. So I figured it out, and it was going well. And I like projects and, things like that. So I got this bright idea. Well, I'm going to go buy this place for $75,000. It's a dump, and it was a dump. Like, it didn't have, like, it had box gutters that weren't lined and needles and everything. So my idea is I'm going to go buy this. I'm going to renovate it. I'm going to refinance it. I'll clear my debt and it'll be great. And so I'm in the middle of and so that's what I did. And so I did both apartments, sweat equity, all of it, which was an amazing experience. And looking back, that was probably a time in my life where I learned the most about real estate in a number of ways, and also construction and pricing and things like that. So I get done after it took me forever, and it was exhausting. And I'd go to work for 24 hours at the firehouse, and I'd come off on my 48, and I'd do 10-hour days a lot of times. So then I get it, I renovate it, I refinance. I'm like, man, that was great. Like, the numbers are great. Like, it was a lot of work, but I think I'm going to keep doing that. And then my next step was, of course, to read a book like I like to do. And I pulled a book from Bigger Pockets that was called Burr. And they had written, it was by David Green, Bigger Pockets. And they actually have a lot of good, for people, especially for people just getting into real estate. That's actually a lot of their books. Their publishing is really good. At any rate, so I read this book. It was the literal playbook for what I had just done. And I'm like, man, maybe I should have done that and repeat. Maybe I should have looked to see if this is a good idea. But it was just validation. It was. And so really, and that was really neat too, because I had, not only did I learn a lot, what I learned is that it wasn't scalable for me. Residential for me was not scalable. And I'm definitely not a one size fits all type of guy. So I am definitely unapologetically a huge proponent of passive income, commercial real estate, things like that, for a number of reasons. It's scalable, it's passive, all of it.
Well, let's
However,
talk. Let's
yeah,
talk. We'll talk about that in a second. I'm sort of curious. So, backing up, you went and bought this property, and you went through the whole buy. What is it? Buy,
buy,
rehab,
renovate,
rent,
rent, repeat.
refinance.
Yeah.
Yeah, yeah. You did that whole thing before you went and picked up a book.
Yeah. The idea made sense. It's
Yeah,
but
and you just jumped into it.
yeah, yeah. And I think that there's a lot of leap before I'm ready that I've done over my life in a good way.
Yeah.
Probably maybe should have been a little more practical over the years, but I think the growth I've experienced in doing things like that, staying out over my skis and always trying to
Mhm.
figure out the next best thing has really turned me into the type of person that can move forward with confidence in a number of different ways because it's like the unknown isn't fear of the unknown loses power when you're just kind of used to it, I guess. Like, well, I really don't know what's going to happen with this building, but I know I got to get this bathroom in.
Sure, sure. How have you balanced that? I mean, there's definitely times to, take calculated risk, right? Calculated risk for sure. And I mean, I'm sure what do you say, 17 years in the fire department
Mhm.
has taught you a lot about calculated risk.
Yeah, yeah.
So you kind of have to know that. How do you have you are you spending time a little bit more time to analyze things these days, or how do you take the, combine the, like, hey, I'm going to move forward in uncertainty, but I also need to make sure that I'm hedging my bets well.
Exactly. Yeah, yeah. Oh, yeah. So definitely, I am much more data driven right now than I was before. Numbers have to make sense. Period.
Yeah.
And when you're talking about economies of scale like we deal in, those little numbers become very big numbers very fast. So if you're $25 off on a rent projection, or you're projecting, you're using 2021 5% increases in 2024, that's not a thing. Like, you know what I mean? So I'm
Yeah.
very, very,
Just
very, very
times 100
careful
or
about
times 200.
what the upside is. And yeah, so taking calculated risk, definitely entering deals cautiously is something I do. But as far as like jumping into new things that I don't really like, as far as like jumping into the next cool thing, I am very, very much, I will research it, I will read it to death, and that's the tack I take. No longer am I going to go renovate a building and then learn how to do it. That was dumb. Like, I got a lot from it, but it was dumb. Like, what was I
Sure.
thinking? Like, I know, well, I mean, I was probably what, you know, 20, no, 30 something at the time. Like, 42-year-old Eric is much smarter.
Yeah, yeah, I was gonna say we using the assets you had at the time, which was definitely a lot more of the energy, right? You're
Yeah,
talking about
yeah.
sweat equity. That makes a lot of sense. So, kind of a fun story I definitely had to ask you about. And so these days, it's ultimately kind of moved you forward into multifamily,
Mhm.
still residential, just on a bigger scale. You're talking about, that $25 difference times 100 times 200 units, much, much different,
Yeah.
100
Divided
times
by a
$25.
percentage, it gets really, really big, really, really quick too with that cap rate.
Absolutely. With valuations for sure. So let's talk about just briefly your asset is multifamily, right?
Yeah, yeah. So I'm definitely heavy on multifamily as far as what asset classes I look at. I also look at different asset classes, and truthfully, when I look at them, it's not because of the asset class, it's because of the operator. So
Mhm.
there are a few other asset classes that I'll have offering that I would offer, but it's based on the operator. Um, and really, I feel like it's almost a product to say, hey, you know, to keep money moving and diversify. If you've got an LP in two different multifamily projects, you might be able to get in to a mobile home park a little bit less, and all the asset classes, as you know, react differently to inflation and macroeconomics and market conditions and things like that. But to have that flexibility for investors, but I do focus, and I am heavy in the multifamily for one, just the way the market is right now. And there's all the news about this and that, but the fact remains that if you know good operators and good markets, they are going to be getting good deals and they are going to run them well. So all this uncertainty and all this like, well, what the market's about to crash or it's about to bottom and I'm going to wait for the bottom and all this, it's like, good operators, they get the returns in any economic climate. Um,
Right.
and with
Yeah.
multifamily, it just speaks really well to my skill set as well. With the accidentally burn the property, but also just residential. I think multifamily is the next logical. It was the next logical step for one because it's so abundant, and for two because it was an easier learning curve. So it was easier
Oh,
to
for
wrap my
sure.
head around it. So when I was learning how to underwrite, um, it really made a lot more sense, and I kind of knew what levers were getting pulled where, and so that's why, for one, I just believe in that product. As far as like stability and predictability, it's a little more tried and true, I guess.
Yeah, everyone needs a place to live.
Yeah.
Everyone needs a place to live. And I really like what you're saying there too. It sounds like what you're saying is even though there's going to be news about our economics in the world nationally too, it's that we're going to have market cycles and seasoned operators, the ones that are underwriting deals, analyzing this, they're always going to be an opportunity to make money in a given market. And our, seasoned operators who have weathered the storm and have been on the eye of the storm before, those are the types of captains that you want being at the helm of the ship, right? And so certainly there's that opportunity. How do you quote unquote capitalize on it? So
Mhm.
I do agree with you. There's always a different strategy at play while you're looking.
Yeah,
So
and
you've
and
got
and
a
a lot of it
background.
is operator dependent, Steve, and I think you kinda touched on a good point about and the other thing is a lot of these operators, like I saw a deal that had just closed from, one of the operators I partner with, and they were like, I think I can't remember the exact exit cap, but their exit cap was higher than their going in cap. So I was like, "Hey, this is conservative. This is very like this is a good deal, even if it was like not. You know what I mean? Like these guys know how to underwrite, and it's like you can be
Mhm.
excited about that, even though it's in the market's declining. That's all been factored in by by these underwriters that are really high end underwriters, and so it's like, okay, wow, like yeah, this is what a conservative underwriting deal looks like, and they're getting these returns. I'm like, yeah, so there's operators that are really doing great right now, buying at huge discounts, getting favorable debt terms, all of it. So, and that's another reason that multifamily is appealing to me is that a lot of the multifamily operators right now are vertically integrated for one. So that takes out a lot of the what ifs. And for two, they've got really great relationships with lenders and all that sort of thing, like the relationships with the lenders and the brokers and the all of that stuff that you have to do as an operator. Like,
Yeah.
we've talked about that before. Like, it is labor intensive.
Yeah. Can you explain that piece a little bit for the listeners about for operators that are vertically integrated? First off, can you kind of explain what vertically integrated is and how that helps to de-risk a deal or just simply what some of the benefits of being vertically integrated means?
Oh, yeah, absolutely. Yeah. So, vertically integrated in the multifamily space, for example, would be that if you have a property, you know that it's going to need to be renovated and it's going to need to be managed and all that stuff. So a common vertical integration for them would look like now there will be a caveat here. So the operators will buy the property, but then they also would have a stake or own the company that is going to renovate it. So I would consider it vertically integrated for an operator that's been in been in the sub market for a few deals and they've had the same GC throughout and they're
Hmm.
using the same GC on a current project. That is a relationship that is solid enough that I would consider it vertically integrated. A lot of them will come in with perhaps property management companies that the operators actually do own and run. Or same deal, maybe they've just got such a standing long-term relationship. If they're successfully operating 800 of their units and you go to add 200 more, that solid relationship, I would consider that a vertical integration for as far as commercial real estate purposes, for sure.
Awesome. So vertically integrated, you see it definitely if you're in a market, you'll have hundreds of units where you're using the same general contractor, GC, like you said, or a property management company that you're kind of stacked with these different types of functions.
Yeah, and a great example of vertical integration, Amazon. They know
Huh.
they have, the supply chain and all of that, from what I understand, is very, vertically integrated. Every step that product hits along the way is somehow Amazon controlled.
Yeah, let's stay away from talking a little bit about that.
So,
There's a lot of third party sellers and things and along the way and
yeah, yeah.
there's
So
some
that would be, there's other ones. That was one example. So I was just kind of thinking of a more general example. So yeah, if someone owns yeah, like, you own every piece of the production. So if you're making a widget,
right.
you own the factory, but you also own the raw material production that goes into that factory. That would be the most general way to explain it, I think.
100%.
Yeah.
It makes sense. Things that are upstream and things that are downstream.
Yeah. Yeah. And
Yep.
there are a lot
Yep.
of great vertically integrated companies to use as an example, but that's basically it. To make a widget, you own the factory, you own the raw materials, and then you probably own the trucking company that brings it to you too.
The
Yeah,
distribution, the stores, all the way along.
exactly,
Yeah,
exactly.
absolutely. Cool. So, I mean, we talk a little bit, a bunch of not only like what business model looks like and the chain there, but also of the other components you're talking about property management, general contracting for improving properties, renovating, etc. One of the things I don't think I've really asked any other guests, and I'm not sure that I've covered because I don't know. I actually, as I thought about it, it just never came up. But I was wondering, can you have a finance background too, which I think is kind of a fun mix from a finance background and then becoming a firefighter,
Hmm.
fireman, and fire
Yeah,
lieutenant.
firefighter, fireman.
Um, is is talk to me what does private real estate equity company even mean?
Okay, yeah. So basically, yeah, and kind of to touch on the finance major, it's interesting how kind of life works out.
Mm,
Yeah, I went from being a finance major to a fireman, and then I started getting into entrepreneurship, little things here and there. And then when the time came to get into commercial real estate, I find like, whoa, 20 years later, I'm using this finance degree like crazy. Like, whoa, how'd that work out? Things
yeah.
like that. So yeah, private equity company. What I would do is basically I take these great operators I know, and when they get a deal, I'll take it to my investors and I'll say, hey, we are raising money from private individuals, and what we do in the syndication, we'll pull that money together and we'll place it with the GP so they can use that equity to finance it and in conjunction with their debt. Usually so the returns paid out for that type of money. So Flowers Capital will place, maybe like $1 million from 20 different people. So those 20 people, they might do 50 in one deal, but then they might do 50 in another. So a private equity firm like mine, we would take we would get you in that first one great deal. It's like, okay, so I got this place in Georgia. I'm looking to invest again. And then I can say, okay, great. So I've got another really great market. I've got another really great operator. So a private equity company like that is able to place investor capital. Consistent deal flow is big, which is one of the greatest things about passive income is your ability to get money coming in and compound it. And being passive income's like the gold standard anyway. So but yeah, yeah. So
Yeah.
we'll take investor capital and place it with the operators that we know, and we trust them, and we know their underwriting. They're going to be the types of guys that are exiting it at a higher cap than they're going in. Those types of guys.
For sure.
So,
Yeah.
so yeah, to be able to offer that flexibility and really come with a product that we believe in the underwriting, we believe in the market, and we believe in the operator. And that's a big chunk of that stuff that is done for an investor. And of course, like investors should always do their own due diligence 100%. But another piece of the pie that I like about Flowers Capital is that I get to do the educational part too. I really like putting out articles that say, hey, and one of the ones I wrote that I like the most is when I first got into commercial real estate, the cap rate discussion was always so confusing. Going in cap, exit cap, what kind of cap rate is the property putting off? All those kinds of things. And it really kind of confused me because it's the same term being used in different applications. So that's one of those nuances an investor probably would need to know. And and that's a cool
Yeah.
thing when you can sit down and say, "Oh yeah. That confused me too, and here's the way it works." Like to just really lean into that educational prep process with an investor is really rewarding, really.
I would like to get into that, but I wanna recap that because I think you explained that in detail really well. And so private equity is you have the investors, private investors who have their own capital that they're coming with, and they'll invest it privately through private placement with someone like Flowers Capital, your firm.
Yes.
And the value add with real estate private equity companies is real estate is the asset.
Mhm.
So in tech, we're thinking about private equity companies that are investing in companies, but ours and like Flowers is private equity in real estate. So private investors that are working with someone like you to place capital with operators. So there are private equity funds for companies, private equity for real estate, private equity for debt funds, private equity for different types of assets. So I think the thing that to really take away for the listeners too is working with someone like you and Flowers is the educational component and having the relationships with operators, knowing you know knowing the landscape and understanding properties, having jumped in and seeing what looks good and what needs to be looked at and know what questions to ask. That is a ton of value add,
Yeah.
plus the education along the way.
And honestly, Steven, I feel like as far as what the value add, I don't look at it as like I feel like when I place money from private equity into a deal, at that point I'm their advocate. So I advocate, I feel like by performing like really in-depth due diligence and being critical of underwriting up front is really advocating for the investor on the back end. Even if I'm not directly running the deal, I still have another set of eyes on there, my own, to say, hey, here's what I love about it. Here's some things I had concerns about. Here's how they answered those questions. That kind of
Mhm.
thing, to say, hey, these are some questions you might not have asked, but I already
Or
asked
no to
them.
ask.
And then you can
Or
say,
no to
and
ask.
then an investor can say, well, what about this and that? And then I can say, great question. Let me go to those operators and let me get you an answer. Or we can all be in the webinar together and I can ask them. Yeah, to be able to get answers for investors in the way they want to get them, I guess.
Yeah,
Yeah.
that's important. I think one of the things to also mention here is that many times these deals aren't even going to be open to investors themselves, and those operators will only come to private equity firms,
Yeah,
right? Like
yeah.
yours, so that you'll be the only one that has access to it. Many investors won't be able to invest directly.
Yeah. So, we're going into working with a private equity firm. You might be able to go in for example, $50,000. Whereas if you went directly to the operator, they might have a minimum investment of 100,000 or something like
Or
that, or
500
500.
or
Yeah,
1
yeah.
mil.
Oh, yeah. Some of those operators they get big quick. Yeah,
Yeah, $1 million checks
yeah.
for
Oh, for
sure.
sure.
Which is exactly why. One of the things you're passionate about is working with entrepreneurs,
Yeah, I
right?
love it. Yeah.
Yeah. Talk to me about, what are these the entrepreneurs, what problems are they facing? I'm thinking, yeah, tell me about the person that you're thinking of that you like working with.
Okay. So I guess one thing I think that entrepreneurs really need to think about is to stop trading your time for money. The E
Hmm.
Myth Revisited by Michael Gerber is a fabulous book for any entrepreneur getting started or established entrepreneur that has not read it. It is a must read. And it is a
Hmm.
transition from being a craftsman to a manager to an entrepreneur. And the mindset of an entrepreneur is very different than the mindset of a craftsman. They are, it's almost like you have to be able to delegate where your weakest parts are. So, really, for the entrepreneur, I think the biggest problem is really to understand the need for passive income because we're all in this crazy entrepreneurial world and there's ups and downs and there's a lot of risk that comes with it. And we all have this goal of financial freedom and it is so attainable. But I just believe that entrepreneurs need to stop trading their time for money and really go after these passive income sources. And they could come from different places too, but entrepreneurs need passive income. Anybody who desires financial freedom needs passive income. That's my opinion. This is not an encyclopedia quote or anything, but that is my belief. And a lot of the things that I think entrepreneurs have a hard time with is just mentally pushing through some of that grind too. It doesn't always feel good and it doesn't, and you're always kind of like, ooh, man, like I need to pull this one off because, like I've been working too long on this. And the
Got it.
stakes are very high too. As there's like we have been out, learning our craft for decade, and so it's your passion too. And I don't want to see other entrepreneurs pursuing their passion and fall up short in retirement. Like I don't want entrepreneurs to have to work till they're 65. I want them to have financial freedom when they're 45, when they're 50, when they're 40. And because when an entrepreneur achieves financial freedom, I think the community benefits as well because then those same people come back with bigger and better ideas and really start impacting other people. And when I talk with and I love talking with young entrepreneurs and they're going, well, it's like, you can do this, right? And they're like, what do you mean? And I'm like, well, yeah, you just you do these couple little quick tips and then the light bulb goes off and it's like, yeah, I think I can do this. And I'm like, yes, you can, and
Hmm.
I just find talking to other entrepreneurs very energizing and very inspirational. And yeah, we're kind of a weird group. And I know there has been times I have desperately wanted to quit. It gets hard, to drain. It's physically and at one point I was just so ready and I thought, man, you know what? I'm just gonna probably just close it up and see and da 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 da. And I thought, well, wait a second, how would I do that? And then every time I thought about how to quit, it didn't feel right. I couldn't figure out how to quit. And I'm like, well, you're jammed up now, buddy, but at least you're not a quitter. And
There you
then you
go.
move forward and you move forward that perspective. It's like, yeah, you've already decided this is your path. Just stay on it. So yeah.
I love it. There's a couple things there. I do have to ask here in this case. You're talking about entrepreneurs with the up and down part, and yeah, sales depending on the business and what kind of business they have and stuff like that. And there's definitely seasonality, and there's one can make arguments about how is it a marketing problem or a sales problem or whatever kind of thing along the way too. But it sounds like since you're referencing the E Myth too, are you thinking about people that might be more self-employed or many more that might be on earlier businesses? Trying to
Um,
get an idea of.
and I think that that's a really great question because for one, I don't know how to answer it. Because I think being an entrepreneur is more like it, if you lean into it, it does kind of become your identity in a sense. But I think
Hmm.
entrepreneurs and the entrepreneurial spirit is displayed in different ways. So there's a lot of entrepreneurship that goes on in some companies where they have the freedom to invent and implement things for their company. The startup, the one man startup, the small business owner, I would consider them entrepreneurs as well. They're out there
Hmm.
making their own way. They got their company, they got to run the books, they got to do everything. And I think what maybe the kind of tipping point is with that is it's like you're willing to take on huge amounts of responsibility for a big vision that may or may not be like seem tangible. So when you set like
Sure.
so when I set a goal, I might have a 10-year goal and it seems so intangible, so abstract, but at the same time, logically, it is very possible. There's a whole lot of
Hmm.
mindset weird stuff that goes on. It's like your brain's automatically going to go to a negative outcome, even though the positive outcome is likely more realistic, right? But yeah, I think an entrepreneur is just really someone out there on their own, implementing their visions, implementing their dreams, and it just happens to be in the context of business.
Got it. So you've gone through quite a bunch of stuff. You've given, some of your experience so far. We haven't talked about, kind of some of your origin story, which I thought was a lot of fun to learn about too, with the stories of going to watch some of the, you know, going over to I think it was your grandparents and getting kicked out before some of the soap operas went
Oh
on
my
and,
god,
you know,
yeah.
stuff like that. But you have this idea of as we're sort of pivoting from the entrepreneurial stuff and that spirit of just kind of go go go, right? Not in a rushing sense, but it feels like more of a sense of resilience. One of the things you is important for you is to fail forward, right? Talk to me about failing forward. Where have you done this, and what are some nuggets that you would tell others listening about fail
Oh,
forward?
absolutely. Failing forward has probably been one of my more formative skills in life, really. So I think when you can take a so-called failure. So I had a commercial construction company that I tried to launch a couple of years ago with a friend. I learned so many things. We're still friends. We were just both super ambitious, and yeah, I learned a lot of things about kind of what making sure that that your partner is on the same page as you are. But yeah, so that's one example. It's like I went and pushed and it didn't work out. And I didn't beat myself up. I didn't say, "Oh, you're such a failure. You're a loser, Eric, that you had to fold the company." Instead, I thought, "Dang, man, I learned a lot." And
Hmm.
that was at that time a newer thing for me because it had taken me a long time to start reframing my failures as lessons. And when you can
Mm.
reframe your failures as lessons, then it almost becomes a superpower where failing forward becomes much easier. Failing forward for me was really hard at first because I'd fail and I'd be upset and then I'd get another great idea and I'd go, all right, let's try this one. And then I'd fail and I'd get bummed out, but then I'd get in. I'm like, wait a second. When you give yourself credit for your whole body of work, then you realize like, whoa, I learned a lot. And doing these things and being curious and kind of, taking the next right step. So failing forward for me really means taking what would be a failure for most people, learning from it, and doing better the next time and whatever you do.
So important to have that. Let's break that down a little bit if you would, because I think the steps are so necessary to slow down, and I'd love to maybe deconstruct that a little bit here. So like more how I mean that is, some people will take failure, perceived failure, right? Failure is only if you really stop, really,
Exactly.
right? But the like you were talking about, some people will and I have a whole I've when this is so relatable, which is why I want to spend a minute on it with you. Is it can be there have been people that will stop and say, okay, this thing happened, and then kind of exit and stay right there, right? What is some of the things that you've thought about that helped you go from, this is a perceived, quote unquote loss, and then you're like, how do you pull yourself through the rest of it so that it becomes a lesson?
Hmm. I think reflecting appropriately. I one of my I always say like probably two of my superpowers, my favorite attributes about myself would be being curious, because that leads me to be kind of what I consider myself a lifelong learner. So I love just being in something new and figuring things out and learning things new, but also being like so holding myself accountable, I guess, in a very
Mm,
practical, matter of fact term. And a lot of that I got from the fire department. So when I got hired at the fire department, I was a very immature year old, 25-year-old, and they really built some character traits in me that are beyond valuable. Personal accountability is one. So I can go back and look at a on perceived failure. So when for the audience, when Steven and I are talking about failures, it is like he said, perceived. It is not a failure, believe me. There are so many people out there that will tell you that, they say, I think it takes entrepreneurs like 10 times to finally get their first company right, or something like that. It's something
yeah,
crazy.
yeah, exactly.
And I'm sure, and I know I've heard at least a few good stories from Silicon Valley where, a software guy might have had a few flops and then gets that great idea, and it's like, wow, yeah, this is a good one. But they've already had a few, a few platforms fall short, things like that. So yeah, so when I go back and I reframe my failures as lessons, it is from a very direct point of personal accountability, and say, you know what, Eric, like this went wrong. Anything outside of what I did is insignificant. It doesn't matter, because what I look at is where I could have done better, evaluate that, not beat myself up over it for more than a day or two, and then move on and say, okay, yeah, like that was, you left a little on the table here. Here's what you should have done. Now you're going to do it. Now you're going to do that moving forward. Like, in some of these lessons, it's almost like the biggest failure, the bigger the failure, the bigger the lesson. And
Hmm.
and if you can stop the negative rhetoric in your head and say, if you go and something doesn't work out, it's not because you're no good. It's because you probably made some mistakes along the way that you need to fix and
Yeah,
address, grow as a person, and get that next company going way better. That sort of thing.
yeah,
But yeah, looking back
yeah.
and saying, and I had some times in the fire department where I really had to do that and say, whoa, yeah, that was sometimes, it's like you get yelled at for no reason. But there are definite times where it's like, oh yeah, that was my fault. That was my fault, and I will fix it, and it will not happen again. And
That's
that
the
is how it
accountability
goes.
part.
Yeah.
Got it, got it. Yeah, and as I'm listening to you there too, when you said things like when things don't go the way I expected, and that's a really interesting way to put it, and I think it's important to call out because it's like a situation is presented. I did a thing and it didn't go the way I thought it went, and so next time when the situation is presented, you know I'm going to do something different, and if it works, then I know to do more of that next time and less of the other thing I did. And so that's just kind of the learning thing. And I think the curiosity thing you mentioned of what could I do next time is the it's the power of questions,
Mm.
asking the questions. Well, what could I do next time? And that brings focus to, instead of poor me, it's what can I do next time? And that becomes a much more empowering question too, right?
Oh, yeah, and so much is wording when you talk to yourself too. So I guess a good example, like, so when you say, like, I guess the wording of it's like, what happens if this happened? So somebody with a negative thought process would come and you say, well, I got this great idea. And sometimes it's the people that love you the most. They're just worried about you. And they'll say, well, what happens if this happens? If this happens, if this happens, if things go south and it falls apart? And the way I would word that, but there's also a converse way to thinking of that is what happens when this thing gets to where it's too big or I need somebody else to run it? Or what happens when this thing takes off? Like, am I ready for success? Those are
Sure.
what happens when should be the question that an entrepreneur is asking. What happens when this thing takes off? Am I going to be ready to have an idea of who I need to hire for what roles in what order? What happens
Sure.
when this thing takes off and all of a sudden I, I'm needing to find 8 deals a year instead of six, whatever the case may be. You start thinking in terms of that, and already we're talking. And I can't even remember my mom's question of what if. I can't remember what I was going to say because she's asked me a minute. What happens if? And I can't even remember any of that stuff right now because I've already spoken and it's changed the language in the conversation, and that positive self-talk keeps things a little more clear too.
Yeah, and it kind of fires you up too
Yeah,
in
yeah.
the what's possible. Yeah, talk to me about you went back a couple times now, and when you got hired on to the fire department at 25, and you were doing your first investment, jumping in with sweat equity and on your 10-hour shifts or your breaks rather. What are some of the things that, from a reflection point of view, sounds like you're really big into here too, is what are things that you would tell newer investors based on the lessons you've learned from trying different companies, from doing things with partners, from doing any of your other things that you have done and kind of learned over the years? What principles, what advice would you give to newer investors that are just starting out?
Okay, so I guess the question would be a little different based on is this someone based on kind of what arena they're going to operate in. So for somebody starting out like me that was going from residential as a younger guy, I would do that path again because I learned so much. Where I landed a handful of years ago was that wasn't scalable for me. That wasn't my path. It wasn't
Hmm.
scalable. It was trading my time for money, and I knew I needed to get into something at an economy of scale, really. So what my advice would be is definitely if you're younger and you're getting into the real estate game and you're going to go the residential route, have your personal finances dialed in. Have your lifestyle dialed down to where it is comfortable to go and leverage money to buy a property. House hacking is a great way for young guys to do, or anybody really that has the flexibility to do this. But yeah, do not upgrade your lifestyle as your money increases either. And
Hmm.
actually, I had a really great conversation with my uncle a month or two ago, and he went from having a landscaping company. He's 71 now, but he went and had this landscaping company, and then over the years, he sold it. It's this fabulous like whole company, and he went from landscaping into like turf management. He did all this stuff, and he made a really neat point. He said, you know, and he said one thing that when I sold the company, it wasn't stressful because I was in a good place because I had never upgraded my lifestyle. Me and your aunt, we've driven the same cars and the same house, and now we can do whatever we want. So, with that said, like my idea of financial freedom may be a little different than his, but the lesson is the same. Like, don't upgrade your lifestyle because that can greatly impact your financial freedom in the future too. You get there faster, plainly. Yeah, and so for someone that doesn't have time to do that, or they kind of really realize, like I did a number of years ago, that I don't have a 401k building up and compounding because I didn't make those huge investments early on in my life, in my career. And where that money was going was into like real estate and all this other stuff that benefited me as a person, but it didn't benefit my 401k. So here I am looking and saying, okay, so like that's not like going to get me where I need to be. So to get into real estate for the passive income aspect of it, I would say definitely know the basics and just be ready to ask questions. And I would say like there's no such thing as a well, here's the thing. There is a such thing as a dumb question. There 100% is. What is important is that you're sitting with a person or people in a room or across the table that you can ask a dumb question and you don't feel dumb.
Right.
That because you're not going to ask me a question I haven't already had. You know, it's not a matter of like yeah, I ask dumb questions all the time, like seemingly dumb questions, but I always get really great answers. And you just have to have, yeah, like I mean, I think that's life though. Have the humility to just be able to ask a dumb question for the sake of being curious and learning. But yeah, for a passive investor getting in, do it sooner than later. And there's a lot of data out about the negative effects of waiting for the bottom of a market. More often than not, people miss out. But a passive investment now is worth a lot more than a passive investment next year because of compounding and all of that. So yeah, I mean, I think for someone looking to get in passively sooner than later, and get with somebody who's willing to kind of tell you, um, the good and the bad, because not every real estate deal is going to go up and down, up and down, up and down, and that's why you want to be with these great operators because they can navigate that, and that vertical integration takes out a lot of that. But regardless, like there's always going to be so yeah to be able to approach someone and say, hey, here's my concerns, and here's my question, and have someone sit across the table and say, hey, yeah, here's what's going on here. Here's the answer to your question. So I guess to get in early and also get in with someone that's willing to kind of coax you along and get you up to speed, because financial freedom should be fun. It shouldn't be that you put $50,000 in a deal and then worry about it for 5 years. You should be putting $50,000 in a deal, getting free money, and then having a little party when you exit. Like the work part should be on me. Like I'll do the work, you just take you take your returns, and that's the way it's set up, risk adjusted, right? So yeah, I think my advice to someone getting into residential and getting into passive would be a little different. But my advice to both those people and just any entrepreneur or anybody in general is just, man, take the leap, just go for it. Because the worst that can happen probably isn't even the worst thing that can happen. It's not going to happen anyway. And if it does, you'll figure it out. You just it. You'll figure it out. Like you'll grow and you'll learn and you'll figure it out. And yeah, take the leap for sure.
Yeah, man. The point of the things, the quote unquote worst things you think are gonna happen usually don't happen anyway.
Exactly.
That's a key point. So live within your means, or don't have your lifestyle grow along with income.
Yeah.
Ask questions, get in there early, get with someone who can teach you things along the way. Is some of the things I was counting
Yeah.
there
Yeah.
for
Yeah.
sure.
Yeah. That's the best
And
way to
so
put it, other than my long-winded version. That's exactly what I was saying. Yeah.
we need both versions. I enjoy it. Thank you, Eric. It's important. So I want to be respectful of your time here. I know we got into a bunch of different things. I know we kind of dove there deep too, like what private equity is and stuff like that. And I think those are good questions because again, I don't think I asked them, so I'm glad that we jumped into that. But what can we see? What can we see coming from you next? You're on this path to continuing to do things. We've got, and you've learned a lot of expertise that you're bringing into Flowers Capital. You're working with operators. You're here to, talk to investors to raise capital as well. What else is coming for you?
Yeah. So right at Flowers Capital is certainly a labor of love. Like I love it. I mean, it's named after my grandfather, and so like I love what we do. I love our product. I love working with investors because we have the same goal, financial freedom. Like we all want this thing for each other, right? But as far as like what's coming, probably there's going to be great deals coming. There's going to be all this sort of stuff. But for me, what's coming with Flowers Capital and myself in the future, I'd like to see, I have a lot of other great ideas I'm ready to implement. And a lot of neat things I think I can do for, even neighborhoods in Cincinnati. I think there's a lot of opportunity to kind of get in there and really kind of change the landscape of the city a little bit. Some other like really neat, fun business ideas I have, that sort of stuff. So in the next few months, next year, couple of years, for sure, with the with the with the landscape right now, we're going to be seeing a lot of really great deals coming with really great returns. Um, and I've already started seeing them. Big buying at like 30% discounts. I've heard, and more than one occasion. So yeah, a lot of great deals coming, and the future of Flowers Capital. I don't know, just keep working for financial freedom and for our investors in perpetuity, I think.
Sounds great. If you're enjoying it, why not?
Yeah.
And to close this out, I really like how you kind of have this. We talked about failing forward, but you're very I don't know what you call it. What do you call it? Like a slogan? It's almost it's branded right there of live life bullish.
Live
I'd
life
love to maybe
bullish. Yeah.
just talk to me a little bit about that, and we'll close out here.
Yeah.
What does that
So that
mean?
was actually something that my grandfather would tell us. That was
Hmm,
his slogan. And I'm a little jealous. He gave my cousin the bowl that sat on his desk, but he gave my cousin the little bowl that he had,
nice.
Bull, not Bowl. At any rate, yeah, to live life bullish is just take risk, see what you're made of. You want to go, you want to go to wherever, Canary Islands, and go off the radar. Do go find those experiences, find what makes you happy. Find that generational wealth for your kids and your grandkids and all that. Go out there and get it, right? Go get those experiences and go do those things for those people that you want to do. And just don't be scared. Just believe in yourself a little more than you believe in the doubt, and you're well on your way, really. you know
Take the steps.
yeah.
Yeah, it's a good. It's good to always have remind yourself of that when you're faced with
Yeah,
decisions.
my
So
grandpa Sheldon was his name. I had grandparents Sheldon and Wilma, and they were very like small town. Grandma was a little, she was a farm girl. So when they would watch those Price is Right shows and the soaps came on, it was very racy. So, but yeah, like they, yeah. So Flowers Capital, when he would say that was actually Grandpa's motto. He's like, hey, just remember, live life bullish.
awesome. Well, ladies and gentlemen, thank you, Eric Burns. Where can people find you,
Um,
and can they engage with you?
Yeah, aside from LinkedIn, you can go to www.flowerscapital.com, and right at the top should be some free content. And then you're off for the races to financial freedom.
Outstanding. Thank you, sir. Appreciate you being here.
Hey, Stephen, great time. Thank you very much.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.